Thanks for choosing this video to understand GST regime for exports and imports. As we are all aware that GST will be levied on goods and services, and it is definitely going to have an impact on exports and imports. Let us first understand what is GST. GST will replace all the various taxes and bring them under one umbrella to make compliance easier. It will replace the following taxes. First of all, the taxes which are currently levied and collected by the center, like central excise duty, additional duties of customs, which are commonly known as CVD, special additional duty of customs, also called SAD, and service tax, and taxes which are currently levied and collected by these states. The first one is state tax, second is central sales tax, third is entertainment and amusement tax, except when levied by the local bodies. Is taxes on lotteries, betting, and gambling. Now, in the new regime, center and states will be simultaneously levying the GST. Three taxes will be implemented to help taxpayers to take credit against each other, thus ensuring one nation, one tax. As you can see here, the structure of GST is like this. There are two categories of GST. One category refers to the movement of goods within the state, which is called intra-state movement. And the second category deals with the interstate movement of goods and services. Under the intra-state movement, we have two types of GST. One is the central GST or CGST. Second is state GST or SGST. However, in the case of interstate movement, there is only one GST, that is called integrated GST or IGST. For the purpose of exports and imports, the Act specifies the transaction of exports and imports as interstate movement, and therefore only IGST is applicable. Let us look at the general impact of GST on exports and imports. Most of the experts says that GST is going to have major changes in business structure in India. It is likely to have significant changes in the international trade and the international trade procedures. It is likely to bring changes in computation of basic customs duty also. It may also lead to withdrawal of several tax exemptions which are enjoyed by the exporters currently, into changes in the terms of international trade in foreign trade policy, the review of which is likely to be released very soon. Let us look at the tax structure and input tax credit on import and exports of goods and services under GST. Supply of goods and services in the course of imports and exports has been considered as interstate trade or commerce. Hence, the provisions of IGST Act shall be applicable to the exports of goods and services. In this table, you can see the tax structure and input tax credit or ITC in the case of imports and exports of goods and services under GST. As you can see, if the transaction is exports, the tax structure is zero rated supply and therefore no tax is chargeable. However, in the case of imports, IGST and basic custom duty or BCD is to be payable by the importer. Input tax credit or ITC is allowed in the case of exports, so refund will be made on the GST paid on the inputs. In the case of imports, ITC is allowed only on IGST paid and not for the BCD which is paid by the importer. Let us look at one example of the export transaction. Let us assume that person A exports goods with FOB value of 1 crore to UAE. He will not charge any GST from the importer in UAE. If there is ITC available for this shipment for say rupees 10 lakh rupees, the same will be refunded under section 38 of the Central GST Act. Under a new provision, 90% of the refund will be released within 7 days of filing the application of refund so that exporter do not become short of working capital. Remaining 10% will be paid in normal course after verification. This fast track scheme is available only for the exporters. Now let us look at one example of the import transaction. Let us suppose person A imports goods with CIF value 1 crore from UAE. He will be charged IGST of say 10% on 1 crore, that is 10 lakh rupees, plus suppose BCD is another 15%, that is another 15 lakh. The total cost for the importer is 1.25 crore. After processing the imported goods in his factory, suppose he sells the final product for rupees 2 crore within the country, then he will have to charge the final customer 2 crore rupees plus applicable GST. He will, however, get a refund of rupees 10 lakh as ITC based on IGST already paid by him on imported goods, unless there is no other ITC in the manufacturing of the goods within the country. He will, however, not get the refund of BCD on the inputs. Let's look at some of the important changes for import duty calculations. IGST payable for imports replaces both CVD and SAD. CVD has been calculated on the MRP principle. However, in IGST, which already includes CVD, the calculation is made on the transaction value. This would have an impact on the overall cost of the imported goods. Let us see how the import of services will take place. IGST is applicable to both goods and services imported. In the case of import of services, since the service provider is located out of India, the liability to pay service tax to the government and file the return for the same lies with the service receiver rather than the service provider. However, depending upon the case, IGST paid on the services imported may be treated as ITC under the import and sale model, wherein GST will be applicable on the final product or service sold within the country, as the case may be. Let us look at the impact on exports. As per experts, impact of GST on exports would be positive and may make exports of several goods more competitive, as it is likely to reduce the cascading impact of multiple taxes on several inputs in the current tax system. As GST include both SGST and CGST, so an exporter will get refund of complete IGST on inputs as ITC. In the current regime, the exporter loses his claim on the state taxes paid on the inputs. Therefore, the input cost will come down. It should be noted that duty drawback on several items will soon be revised in line with the new tax regime. MEIS and SEIS schemes will continue. However, duty scrips rates are likely to be reviewed and realigned in consonance to the new tax structure. Just cheer up. Overall, it is a good news for exporters. Thanks for watching this video. I hope this video was useful to you. If so, please like the video and please subscribe to my video channel, the name of which is International Trade Made Easy. Thanks again.